Family Day in Canada is actually quite funny. We get a long weekend, maybe enjoy brunch with our kids, a walk with the parents, and watch a movie at night. And then on Tuesday, our money life looks exactly the same. The bills still surprise us. The car still breaks down at the worst possible time. We think we're saving for the kids. We think we're looking out for our parents. But if you ask, what's the actual plan? Most of us don't really have one. So in this video, I want to give you something different. A Family Day Money Checkup you can actually do in just about an hour after this video. Not a spreadsheet from scratch, not a guilt session, just 5 concrete moves to protect your household, support your kids, and start preparing for your parents without lecturing anyone. So if you're a Canadian who has a partner, kids, aging parents, or all three, if you earn decent money but feel like your financial life is scattered, and you want your whole family to be safer and more prepared, this video is definitely for you. Especially if you're in that sandwich generation, in your late 20s, 30s, 40s, or 50s, thinking about both your kids' future and your parents' later year at the same time. Hi, I'm Yudhvir Kabuli, a chartered professional accountant and a chartered financial analyst. On this channel, I help Canadians just like you understand money in the context of real life, careers, kids, parents, businesses, and just about everything in between. Here's a quick but important note. This video is for education only. It is not personal financial, tax, legal, or estate advice. Before you make big decisions, please talk to a qualified professional who knows your numbers. Today, we're going to walk through 5 Family Day money moves. And you do not need to be good with money just to benefit from these. And you definitely don't have to do all 5 today. Even 1 or 2 can make your family meaningfully safer. So here's your roadmap. Move 1, a 1-page family money snapshot. Move 2, a family money calendar, so big expenses stop being surprises. Move 3, a better way to teach kids about money without turning into that parent. Move 4, a calm, respectable money conversation with your parents. And move 5, your if I get hit by a bus plan, so the people who rely on you aren't left scrambling after you. Let's start with the foundation. Move 1, 1-page family money snapshot. Right now, your financial life probably lives in 9 different places. A checking account here, 2 saving accounts there, a TFSA, an RSP, maybe an FHSA, a group plan at work, and even a non-registered brokerage account with a mortgage, a line of credit, and 2 credit cards. And the only place all of this is summarized is in your head. The move 1 is simple. Get your whole financial life onto 1 piece of paper. Use a notebook or a Google Doc or a basic spreadsheet and have 3 sections. Section A, cash and investments. List your major accounts, checking and savings accounts with bank name and a rough idea of what the balance is. TFSAs, RSPs, FHSAs, non-registered accounts, any group RRSP pensions, or stock plans at work. You don't need the exact cents. It could just look like TFSA, Questrade, about 23,000, and that is perfectly fine. And at the bottom, add all of them up. Total liquid cash and investments, about X dollars. Section B, debt. List your mortgage or mortgages if you have multiple, along with the lender, balance, interest rate, and renewal dates. Then list line of credits, the balances and the rates, credit cards, a total balance, and main interest on each. Car loans or leases, remaining term and monthly payment. Student loans, if you have any of them. Again, this isn't about shade, it is just for clarity. Add a line at the bottom. Total debt, about X dollars. And section C, other key items. This is a map, not the documents themselves. Where are your tax returns stored? Where are your important IDs and documents stored? Passports, birth certificates, and even SIN cards. Who are your key professionals? Your accountant, your lawyer, your advisor, your insurance broker. So by the end of this step, you want to be able to look at that 1 page and say, as a family, here's roughly what we own, here's what we owe, and here are the key people and institutions in our financial life. So 10-second summary for move 1. Get everything out of your head and onto 1 page. Assets, debt, and key contacts. So you're not managing your family's money just from your memory. Action step. After this video, set a 20-minute timer and just start the list. Please don't aim to be perfect. Aim for 80% of the picture. You can refine it again next Family Day. Move 2. Family money calendar. Most families don't get knocked out by surprise grocery bills, but they do get knocked out by lumpy costs they technically knew were coming, but just didn't plan for. Property tax, insurance renewals, kids' sports and activities, going back to school, holidays and travel, car repairs, and any big annual subscriptions. Family Day is actually the perfect time to make all of this visible. Step 1. Map the year. Open a calendar app or print a 12-month calendar. And in the next 10 minutes, drop in every predictable money event you can think of, even if you're only guessing the amount. For example, your calendar could look like March, property tax, estimate $4,800. June, car insurance renewal, estimate $3,600. August, back to school for the kids, estimate $600 in supplies. December, holidays, target $2,000. RSP deadline, first 60 days of the year. Mortgage renewal in October. Once the calendar is in place, step 2 is just to ask yourself 2 simple questions. Question 1, are there 2 or 3 months that always feel heavy for our family? And question 2, could we spread some of those costs out by saving monthly instead of a lump sum bill? And here's an easy rule of thumb. Take a big annual cost and divide it by 12. That is now your monthly sinking fund amount. Here's an example. Property tax is going to be $4,800 a year. Divide that by 12, that's roughly $400 a month. You could set up an automatic $400 transfer every month into a separate annual bill saving account. Then, when the property tax bill actually hits, the money's already sitting there waiting for it. And the pro move is, if your income is lumpy, let's say you get bonuses, commission, or irregular payouts, decide in advance that a fixed percentage of each bonus automatically goes towards upcoming calendar items, instead of treating the whole thing as a surprise spending money. So a 10-second summary for move 2. Put predictable, big expenses on a calendar, and where it makes sense, turn them into monthly saving targets so they stop blowing up in random months. Action step. After this video, add at least 3 big expenses to a calendar with rough dollar amounts. If you want a quick win, open a separate savings account called Annual and Irregular Bills and set up a small automatic transfer. Move 3. Teaching kids about money without turning it into a lecture. Family Day is also about the next generation. Money talks with our kids do not have to be awkward. Let's break this into 3 age groups and keep it practical for our children. Firstly, our kids between 5 to 10 years of age. Here, you don't need any apps, but you do need jars. Grab 3 jars or envelopes and label them as spend, save, and give. The next time your kids get money, allowance, or a birthday bill, or payment for helping around with household chores, let's say it's even just $10, you might suggest your children to put $5 into the spend jar, $3 into saving, and $2 into give. Let them decide within that guideline. Then just do 2 things. Number 1, let them spend a small amount soon on something that they genuinely care about, so they can feel the connection between money and choice. And your second step is, when the save jar hits a milestone, maybe $30, $50, or $100, talk about a slightly bigger goal that your kids are working towards. For this age, between 5 to 10, the lesson is simple. Money comes in, you choose where it goes, choices add up. For our second cohort of children between ages 11 to 15, now the money move is controlled independence. If they get a regular allowance, or they earn a bit from small jobs, help them open a no-fee youth bank account and give them a debit card. And agree on a rule like, at the end of each month, 30% of whatever came in moves to their saving account. Once in a while, sit with them and scroll through their transactions on the bank statement and ask your child, which purchase are they happiest that they made? Is there anything they don't even remember buying? And an even more probing question could be, looking at this whole month, is there something you would do differently next month? You're not grading your children, you're helping them build awareness. Third, for our children between 16 to 22, 2 high impact moves for them. Number 1, their first real paycheck. When they get their first high-paying job, sit them down and walk them through a pay stub. Show them gross pay, then the deductions, income tax, CPP, EI, and then net pay, what actually hits their accounts. Explain in plain English to them why the number they receive is not simply hourly rate times hours worked. Number 2, have them look at their first T4 and tax return. When they have new employment income and a T4, involve them in filing a basic tax return, whether that's using software together or booking an appointment with your accountant. You're not turning them into tax experts here, but you are giving them a baseline understanding of how income and tax work in their real life going forward. Here's a quick myth versus reality on kids and money. The myth is talking about money with our kids will stress them out or make them completely obsessed with it. But the reality is this: age-appropriate, calm money conversations usually make kids less anxious because now money stops being this mysterious adult secret. The key is your tone. Remember to be curious, not fearful with your children. Here's your 10-second summary for move 3. Give each one of your children one age-appropriate money experience. Jars for our younger kids, a simple bank account for our preteens, a pay stub or tax return walkthrough for our late teens, so that money becomes normal, not scary. So here's your takeaway action step. Pick one child at a time and choose one small money step you'll take with them this month. Write it down before the end of this video so you can actually action it. Move 4. Starting the money conversation with your beloved parents. Family Day isn't just about kids, it's also about our parents. And this can often feel like the hardest part. You don't want to pry. You don't want to sound like you're waiting for their inheritance. And you definitely don't want to worry them. So we're not going to ask, how much money do you have, parents? Instead, we're going to ask something completely different. And the tone matters. We love you, parents, and if you ever needed help, we want to be prepared so that we're not scrambling in an already stressful moment. And this can happen on a walk, over tea, or on a quiet phone call, but not at a loud family dinner. Here are 3 gentle questions to ask your parents, and you don't need to ask all 3, just pick one and start. Question 1. If there were an emergency, where would you want us to look for important documents? Remember, you're asking about location, not the contents. Question 2. Is there anyone you really trust with financial stuff? Maybe your advisor, accountant, or a lawyer that you'd want us to know about? That gives you a name and number for the future. And question 3. Have you thought about what you'd want if you ever needed help with day-to-day money tasks or care decisions? This is about opening the doors to talking about powers of attorney, living arrangements, and who they'd like to be involved. You're not trying to solve everything today. You're simply signaling, we, your kids, are here, we're willing to help, and we'd rather talk about this before it actually becomes urgent. And here's a quick red flag I see a lot. Adult children being added as joint owners on parents' bank accounts or property without tax and legal advice. That can create unintended tax consequences, expose you to creditors or divorce, and cause estate headaches later. If that's already on the table, that's a good time to suggest your parents speak with a lawyer and an accountant. Here's your 10-second summary for move 4. Use this family day as a gentle opening to ask your parents where things are and who they trust, instead of asking how much money they have. Here's your action step. Pick one of your parents or older relatives and choose one gentle question out of the 3 that you will ask them this month, even if it's just over the phone. Move 5. Your if I get hit by a bus plan. This move is a gift to the people who rely on you. If you were out of commission for a few weeks or months, sick, injured, or just unavailable, could someone in your life pay the bills, access the right accounts, and figure out what's where without it becoming a full-blown crisis? You don't need to hand out all of your passwords, but you do need to leave a map. So step 1, create a simple in case of emergency list. This can be a document in a secure digital vault, or a printed sheet in a safe, or maybe even both. At a minimum, it should include which banks and institutions you use, just names and account types are fine, how your income arrives, your employer and pay schedule, or which business account money flows through, which bills are on pre-authorized payment, and from which account, any loans or credit products that need regular payments, names and contact details of your accountant, lawyer, advisor, or maybe even a key HR contact, where physical documents are stored in your home. Label all of this clearly. If something happens, start here document. Tell one trusted person where this document is and when they should access it. Step 2, for later, add context over time. You can gradually add policy numbers for insurance, where your will and powers of attorney are stored. Simple instructions from you could look like, RRSPs and TFSAs are long-term investing accounts. Please don't cash everything out at once without proper advice. It doesn't have to be novel, just enough that if future you could speak, you'd say the following. Here's where everything is, here's you should call, and please don't panic, remember I love you. Here's your 10-second summary for move 5. Create a simple, if I get hit by a bus document, so that someone you trust can keep things running if you're suddenly unavailable. Your action step, after this video, start a document called in case of emergency and put your name. Write down 3 bullet points, where your main bank accounts are, which accounts your bills are paid from, and who your primary money professional is. That is your accountant, advisor, and lawyer. You can add details to this document each family day year after year. Here's a quick advanced corner for those of the viewers that want something slightly more nuanced. You can set up a simple family funding waterfall for your extra money. A waterfall is just the order in which money flows when something extra shows up. We're talking a bonus, a tax refund, or a raise. You might decide, step 1, pay off any debt over 10 to 12% interest. Step 2, top up your annual bills, savings until you've got 12 months of those calendar expenses covered. Step 3, bring your emergency fund up to say 3 months of your family's core expenses. Step 4, split the rest between kids' RESPs, your TFSAs, and long-term investings in RRSPs or other non-registered accounts, depending on your tax situation. The point of all of this is for you to remove what should we do with this from a stressful future moment and decide the order now while you're all calm. Let's recap our Family Day Money Checkup. Move 1, a one-page family snapshot. What you own, what you owe, and your key money contacts on a single page. Move 2, a family money calendar. Put big predictable expenses on a calendar, and where it makes sense, turn them into monthly savings targets so they stop being surprises later down this year. Move 3, kids and money. Give each one of your children one age-appropriate money experience so money becomes normal and less scary for them. Move 4, parents and aging. Use gentle questions to learn where key documents are, who your parents trust, and how they want to receive help if they ever needed it. And move 5, your if I get hit by a bus plan. Start or update a simple document so someone you trust can keep the lights on even if you're out of commission. You do not have to finish everything this weekend, but if you do nothing else after this video, except starting your one-page snapshot, adding 3 big items to your upcoming calendar, and picking one conversation to start with either your kids or your parents, my friend, you'll already be ahead of most families in Canada this Family Day. If you found this helpful and you want more Canadian-specific family money content, not just theory, but practical steps, gently hit subscribe. Tap like so this reaches more Canadian families who need it, and please drop a comment telling me, which of these 5 moves are you going to actually try this Family Day? I'm Yudhvir Kabuli, CPA and CFA. Thanks for spending a part of your Family Day with me, and I'll see you in our next video on this channel.